Get ready for breaking news. Angola's envoy to South Korea, Kivuila Samuel Abilio, just dropped some massive details about boosting energy cooperation. We dive into how Angola is positioning itself to supply crucial crude oil to South Korea to navigate the Middle East crisis, exploring the immediate spot market opportunities and the long-term vision for bilateral energy ties that could reshape global supply chains right now. Reacted to this market turbulence. And finally, the market shows signs of resilience. Despite the global headwinds, Seoul shares opened higher today, with semiconductor giants Samsung Electronics and SK Hynix gaining ground even as the Korean ones saw a slight uptick against the dollar. Don't miss a second of this crucial economic update. Stay with us for the full breakdown. Angola is positioning itself as a crucial energy supplier to South Korea, offering increased crude oil supplies to alleviate Seoul's supply challenges amid the ongoing Middle East crisis, potentially paving the way for deeper bilateral energy cooperation. Angola's ambassador to South Korea, Kivuila Samuel Abilio, stated that the spot market could provide immediate relief, allowing South Korean refineries to utilize Angolan spot cargoes directly to meet urgent needs, bypassing other buyers. Abilio emphasized that Angola could serve as a complementary supplier due to limitations in committed production and export capacity. He noted that the two nations' foreign ministries have engaged on the issue, and the South Korean government is expected to facilitate connections between Korean firms and Sonangol, Angola's state-owned oil company. The ambassador suggested that initial cooperation could begin in the spot market before transitioning to long-term agreements as exploration continues. Beyond oil, the dialogue is expanding into critical minerals. Angola possesses significant reserves of lithium and rare earth elements vital for the energy transition, and the government is investing heavily to diversify its economy. Abilio urged South Korean companies to participate actively in the Lobito Corridor project, a vital railway and logistics network connecting Angola's port to mineral-rich regions in the DRC and Zambia. He highlighted that Korean expertise in rail systems, ports, and industrial equipment is perfectly suited for the project, which targets copper and cobalt essential for EV batteries. Looking ahead to the upcoming Korea-Africa Foreign Ministers meeting, Abilio called on Seoul to adopt bolder measures toward market opening. He expressed concern over trade barriers and urged tariff reductions, increased market access, technology transfer, and investment in strategic sectors. The relationship between Angola and South Korea, established in 1992, is deepening, with Angola viewing South Korea as a key partner due to its industrialization and technological experience, which Angola believes is essential for Africa's development. A senior U.S. diplomat is scheduled to visit Seoul in October 2025 to initiate working groups focused on summit agreements. This diplomatic engagement is set to coincide with a significant international event. Further underscoring the deepening bilateral ties, Foreign Minister Cho Hyun of South Korea recently engaged with U.S. Under Secretary of State for Political Affairs Alison Hooker during a meeting in France on March 27. The ongoing high-level cooperation is further highlighted by the participation of key officials in regional economic forums. Specifically, Under-Secretary Hooker is slated to attend a meeting of the heads of foreign policy and trade departments from member countries of the Asia-Pacific Economic Cooperation in Jeonju, North Gyeongsang, on October 30, 2025. Seoul's stock market opened in negative territory on Wednesday, mirroring investor concerns over Wall Street's downturn, which was fueled by rising U.S. bond yields and persistent inflation worries. The benchmark Korea Composite Stock Price Index, or KOSPI, experienced a significant drop, falling 141.07 points, representing a 1.94% decline, settling at 7,130.59 as of 9:15 a.m. This follows a slightly higher opening of 0.72% earlier in the day. Overnight, global markets continue to face headwinds. U.S. stocks extended their slide from recent highs, pressured by climbing U.S. Treasury yields and ongoing inflation concerns. Specifically, the S&P 500 registered a 0.7% fall for its third consecutive day. The Dow Jones Industrial Average dropped 0.6%, and the tech-heavy Nasdaq Composite declined by 0.8%. In the Seoul market, major constituents also saw declines. Top-cap Samsung Electronics opened 0.18% lower, while its chip-making competitor, SK Hynix, suffered a sharp 2.29% loss. Technology investment firm SK Square shed 0.59%, and battery giant LG Energy Solution experienced a 2.38% drop. The automotive sector was also hit hard, with Hyundai Motor falling 3.48% and its affiliate Kia declining by 2.91%. Meanwhile, the Korean won traded at 1,512.31 against the US dollar at 9:15 a.m., marking a decrease of 4.51 from the prior session. Amid the extended selling pressure on top-tier technology stocks, the KOSPI has seen increased volatility following its recent surge, past the 8,000-point mark on Friday. Seoul's stock market showed resilience on Wednesday, posting gains despite an overnight downturn on Wall Street. The Korea Composite Stock Price Index, or KOSPI, experienced a slight dip, shedding 7.37 points, or 0.1%, settling at 7,264.29 as of 11:20 a.m. This domestic performance occurred while the Korean won strengthened against the US dollar, trading at 1,506.151 against the dollar, marking a 1.651 increase from the prior session. The market reaction was mixed across major sectors. Heavyweight technology stocks led the gains, as semiconductor giants Samsung Electronics and SK Hynix both rose, with Samsung gaining 1.63% and SK Hynix up 0.86%, offsetting initial lower openings. In other key areas, artificial intelligence investment firm SK Square saw a modest increase of 0.69%. Conversely, the battery sector faced headwinds, with leading maker LG Energy Solution declining by 2.88%. Meanwhile, major shipbuilder HD Hyundai Heavy posted a significant gain of 5.69%. The downturn in the U.S. market overnight was attributed to rising U.S. Treasury yields and ongoing concerns regarding inflation, which had weighed on global investor sentiment. Despite these external pressures, the Korean market demonstrated a positive trajectory in choppy trading conditions.